Good afternoon, esteemed traders and investors. Today is Thursday, February 26th. I present to your attention another market review for InstaForex. As always, I'm glad to be here with you today. All right, let's quickly go over the news for Thursday. Today, the weekly initial jobless claims in the United States, still without Iran, will be released at 16:30 Eastern Time. This is the only significant economic data point today that truly deserves our attention. Let's see what we can trade on the charts. Let's go. So, let's start by looking at the market prices for gold, which experienced a significant decline yesterday. And it really looks like some kind of short-term technical breakdown that could very well continue. Let me remind you that these gold quotes didn't just fall from out of nowhere, and those of you who closely follow our analytical musings can see that. Yesterday, gold carefully tested the short breakdown zone from the massive collapse on February 24th during the Asian session. What this essentially means is that Asians and Americans are working very closely together as interconnected trading families. And yesterday there was a good drop, and today there's a test, by the way, of another short breakdown zone. No, it really looks like the beginning of some kind of significant downward movement. So please be very careful. But let me also remind you that these breakdowns can work both upwards and downwards as well. And yesterday the Americans were buying back perfectly as well, also from the Asian long initiative. And it was actually quite fun, even one-to-one. You could have made money twice by placing a simple, ordinary pending order, which I highlighted in my master classes.
Looking for real trading advantages? InstaForex offers the lowest spreads and commissions. On major currency pairs, our conditions are better. Lower spreads and only $5 commission instead of $7. That's real savings for every trader. And now, let's get back to the market review.
As for the euro-dollar pair, it grew significantly overnight during the American session, although it scared us with some downward spikes, but the long breakout on the fourth time frame held. Unfortunately, such a situation exists. It held on, and now at the beginning of the week we have this kind of double top formation. I think it will play out in the near future. What is particularly interesting to note here is that if you did not already buy into the market, the potential buying zone is actually quite deep. If the market participants offer attractive prices, you should definitely consider buying from the lower part of this extensive long zone, specifically where the upward trend broke yesterday during the American session. This specific spot would be ideal for making your strategic purchases now. At the moment, we are in the short breakdown zone, which occurred on February 23rd, but it was tested once during the American session, and during the Asian session, the price went quite deep. There is a double top here. I don't think a major reversal should happen here. We have very, very big plans for longs. What do I mean by big? The first target for longs? Well, for now, the first target. Naturally, that's the top. The level for the current week is 1.8339. The second target for longs, it's the area that hasn't been taken out at the 1.10920 level. Let's mark everything. And the third target, that right there is the unfortunate crash we experienced. Regarding the inflation news on February 11th, basically, we see the move here and the liquidity grab from above. From the current level, that is 250, 800, and 200 points, something like that. If this top gets taken out, then I think it's already worthless. The price is approaching the round level of 1.2, behind which the stop orders of serious sellers are trembling. The trend is slowly breaking down. On the higher time frame, H4. For solid buying opportunities, of course, it's better to choose breakdowns of a larger scale. And here, there's only one. It's actually this specific area right over here. If a strong and sustained long impulse comes through, it's much more preferable for us to form a double top on the H4 chart. This occurs between the week before last and the current week. They're gradually rolling the price back towards it. By doing things this way, you can play a much bigger game. According to this scenario, for 105, for the initiative of the internal organizational structure, a significant upward breakout of the current week, something along those lines. That's how things are going for us. Notice how the daily pin bar candlestick patterns, which various gurus of modern trading frequently love to sell, have often stopped working out effectively in the current market environment. The long pin bar has been covered, and the short pin bar has also been covered. But here we considered a long in time, and those who trade. In my opinion, it's still the waves. It's easy to navigate using the primary waves along with the commentary. That is exactly why we are consistently able to successfully avoid certain mistakes. Yes, the common mistakes of traditional and classic price action. So accordingly, we wait patiently, either for a much bigger scenario to unfold, or for those who bought on the small breakout, we wait for the higher profit targets to finally be reached. I personally believe that the first and second components will be completely removed from the equation, and this transition will serve as a powerful and significant new catalyst for sustainable economic growth in the future. So why exactly do I expect this kind of growth? The reason for my persistence is that I still firmly believe in the potential of this January initiative and everything it stands for in the long run, and I believe that right now we are in a large corrective wave, B, which is currently and actively attempting to break out in an upward direction. When we carefully examine and analyze this kind of three-wave scenario, that is the reason why I'm currently considering only long positions, something of that nature. And all of this current chaos is happening at the highs of 2021, right here. And if the euro moves, and it could move precisely due to the weakness of the US dollar, then we will break through all of this. And in principle, it makes sense to look for buying opportunities in this zone and to pull out about 6,000 points or so, because we're coming here for a reason. We're coming here on a weak dollar, and its weakness can be seen through many instruments, including, by the way, the pound.
I also want to remind you that every InstaForex client automatically receives loss insurance. For every $1 of compensation, only $4 of your friend's investments are required. Just submit a request, and your losses will be recovered. Let's continue with the review.
And the pound, by the way, gave a really good British long setup yesterday. And right now it's testing the short breakdown zone and already giving a one-to-one move from it. But I think that in this context, such a trendy word, by the way, right now you can hunt for the liquidity of sellers who are already positioned here, roughly following this kind of scenario. So we move on to update these highs. The idea is exactly the same as with the euro. This is a continuation of the growth of this instrument within this larger long trend. Yes, many will say you need to draw it like this, that we've already broken through everything here and so on. But then again, I have my own purely incompetent opinion, and unfortunately for you, I feel I have to share it. This is just to potentially scare a lot of those short trading newbies out there. The thing is, just like we see with the euro currency, the exact same thing exists with the British pound. A very slippery and dangerous zone is the specific area around the 1.4000 level, which we approached back in 2018 and again in 2021. And we're trying to approach it now. This impulse that happened at the beginning of the year, it's not just here by chance. It's happening within the overall bullish trend, and it's absolutely logical that we'll break through all of this and push upward. This will not happen during the election of another Boris Johnson. In my opinion, this will happen naturally, not due to incompetence, but specifically because of a weak dollar. A weak dollar will push these instruments upward and will rewrite all of this. There will be a significant breakout here, just like, for example, with the Australian dollar, if I remember correctly, that was during the BRICS story. Remember, there was that funny situation. That's why all of this is correlated. I can see it very clearly on the higher time frames, unfortunately.
With InstaForex, you can triple your profit. For every $4 of your friend's investments, you automatically get an extra $1 added to your profit, with no extra conditions.
The Australian dollar is also bullish. It's the same story tied to the weakening of the dollar, and there's plenty of room for growth. But it's already stretched quite a lot. And there aren't any interesting patterns for us here.
We also have a great offer. Fund your account and get a 30% tradable bonus. Trade with additional capital and expand your opportunities with InstaForex.
But when it comes to the Canadian dollar, my friends, there are plenty of these patterns. Just a reminder, I'm currently compressing the daily time frame. And in this specific instrument, by the way, for those of you who might not know, the dollar is the base currency, meaning it is always listed first. For those who studied mathematics, unfortunately, in today's reality, But for those who studied in a traditional Soviet school, congratulations on having this unique experience. If the dollar is the base currency located in the numerator and this numerator decreases, then the final result of dividing the numerator by at least a constant denominator will give us a descending sequence. By the way, if you understand even half the words I'm saying, give this video a like. So, what we're seeing now, and this also applies to the Canadian dollar, is absolutely on point, the weakening of the US dollar. This weakening actually started back in 1925. During this crash, there was a beautiful three-wave pattern, but not on the daily time frame. It broke through the low of 1924. Everything that we are seeing now is a temporary corrective movement, and we should be looking specifically for short positions. In other words, from the current levels, we should go at least another 2,000, maybe 5 or 6, something like that. Looking further ahead, in my opinion, the inevitable weakening of the dollar will be nothing short of apocalyptic. We will move into these zones and cover everything that happened here, roughly following this scenario. Of course, this won't happen in 5 minutes, and maybe not even in 5 months, but you need to be prepared for it. Something like that. All of this will be wiped out. And here, if we invoke the legendary spirit of the late Antonio Fibonacci and carefully stretch out the Fibonacci target extensions, we will see that the 261 extension level is actually sitting right around 1.15. That's a little lower than the current quotes. So, friends, things could unfold according to this scenario, or maybe not. Friends, InstaForex offers a free consultation with a personal trading consultant. Follow the link in the video description, fill out the callback form, and gain access to exclusive offers and special trading conditions. BRT Plus for risk-free trading. That's all. Trade with InstaForex, subscribe to the channel, and stay tuned for new reviews.